Hello, I'm Marcus Brix with the CattleFax Closing Bell. Today's CattleFax Closing Bell is sponsored by Origin, rancher-to-rancher genetics. Origin has a comprehensive lineup of calving ease, performance-driven, and carcass-oriented AI sires. Progeny of several of these sires have sold on the Creekstone and U.S. premium beef quality grids and have graded 70% USDA prime. Visit originbeef.com for your ranch's genetics today. The USDA all-fresh retail beef price for November was released at $5.60 a pound. October beef prices were revised higher by 9 cents from the previous report to $5.68 a pound. This revision makes for a surprising 8-cent drop from October to November, although retail prices are typically moving lower into year-end. Retail beef prices in November were 2.6 cents per pound lower than year ago. Retail prices had been above 2017 since July. Annually, retail prices are expected to average $5.68 a pound versus $5.65 average last year. Fed cattle prices will average near $116.75 for 2018 versus an average of $121.29 in 2017. Overall, cattle feeder leverage against retail will measure lower than year ago, but feed yards have performed better than 2017 during certain stages of the year. Last week's cash fed trade at $119 per hundredweight minus the drop credit was 19.6% of the all-fresh beef price, the highest week 49 retail leverage since 2014. While any increase in leverage is positive news, the high leverage against recent years is more of a function of timing with the rally to the Fed market. Unfortunately, unlike 2015, the retailer is not in the commanding position today, but instead the wholesale level is owning the leverage. Wholesale beef prices as a percent of retail beef have averaged 1.5% better than a year ago since the start of August, their best leverage since 2014. Fed cattle prices as a percent of wholesale beef prices are the worst performing on record, averaging 2.4% below year ago so far through the fourth quarter. Week 49 was the peak in second half wholesale leverage in 2017, with feed yards capturing 55.2% of the cutout. With lower cash prices expected through year-end, at 52.5%, week 49 2018 will likely also hold as peak second half leverage this year. At mid-year, CattleFax expected fourth quarter leverage to average between 52 and 53%, not to top out at that level. Needless to say, wholesale leverage has been a disappointment. Expect leverage against the wholesale level to be a challenge again in 2019, as steer and heifer slaughter will increase another 300,000 head, and packing capacity will continue to be stretched thin. Thanks for watching. Remember to visit CattleFax.com to become a member, receive the latest market news and analysis.
The beef business has never been for the faint of heart. The pressures are real. The volatility is extreme. The risks are big, but the opportunities for success are there. So how do you sort through it all to decide which way to go? For more than 50 years, CattleFax has led the way. We're the time-proven leader in research, analysis, and information, equipped with the industry's most powerful database. Our team is impartial, objective. Our vision is global. Our focus is you. We provide a direct line of contact with you, our client, to the CattleFax team with our daily updated website, modernized mobile app, or the traditional phone conversation. CattleFax, the deciding factor. Become a member at CattleFax.com.